Hi, Brian Walters again with BWA Consultants, where we perform business valuations for clients facing a variety of circumstances. For the vast majority of us, we never have to consider the tax implications of gifting our heirs assets. In other words, when we look to plan to the future and we leave assets to our heirs, our kids, this is not something that we worry about paying taxes on. The reason for that is because there is a federal gift tax exemption, and that exemption is $5.6 million for individuals or $11.2 million for married couples. Anything below those thresholds, we generally speaking can gift to our heirs without the worry about tax implications of that process. However, if you are among the wealthiest people in this country, when you do gift assets to your heirs, it frequently is above that threshold. And gifting assets to your heirs above those two thresholds that I just mentioned is a tax generating activity. Let's just say, for example, a typical marginal tax rate associated with such a transaction could be 28%. And again, that's just an example. Now, a very effective part of your tax planning strategy, and this is something that estate planning attorneys and business valuation specialists typically put together to assist you, is called a family limited partnership, or an FLP. An FLP allows for business valuation specialists to recognize certain discounts on the value of the assets that you're gifting to your heirs, such that you're paying taxes on a smaller amount than the gross value of those assets. Now, for a number of months, in fact, since the end of last year, the Treasury Department was contemplating changes to the IRS tax code. IRS 2704 was the name of the regulations under consideration. Those changes would have made significant impacts on the way that we as business valuation specialists value assets that are part of an FLP. And in fact, in some instances, it would have compromised completely the ability to recognize those discounts. Well, we heard recently that those contemplated changes to those regulations are no more in existence. In other words, they're off the table. And so we can now continue performing business valuations as part of an FLP, and we can continue to recognize the values of those discounts, which obviously means a tremendous tax savings for clients. Let's look at a brief example. Let's assume that you want to gift $20 million worth of assets. Those assets could be anything. They could be interest in a business, they could be checking accounts, they could be real estate, whatever those assets are, assuming for the purposes of this illustration that they are $20 million worth of assets. Let's also assume that the tax rate that applies to this transaction is 28%. If you do not shield those assets in the form of an FLP, then the taxes for which you would be responsible would be 28% of $20 million, or about $5.6 million. Alternatively, if you are able to structure those assets into an FLP, again, the ability to recognize certain discounts on the value of those assets is an inherent part of an FLP. And so let's just say, for example, the discounts are 25% discount for lack of control, 30% discount for lack of marketability. What that means is that you apply those discounts to the $20 million, and therefore you're only talking about a taxable amount of $10.5 million. This is significant because if you're paying taxes on $10.5 million, you're only paying, at a 28% tax rate, you're only paying about $2.94 million in taxes, as compared to the $5.6 million that you would have paid in taxes if without an FLP. That represents, in this particular example, a savings in taxes of about $2.66 million. Again, this may not apply to the majority of people in this country, but for those to whom it does apply, it represents a significant opportunity to recognize tax savings, and it can be a very effective part of an overall tax planning strategy. So if you would like to have a conversation about how this specific tax planning tool might assist you or someone you know, I'd be very happy to have that conversation with you. Please feel free to reach out to me and would love to have that conversation. Thank you very much.